Okay, we got earnings helping the market, and we had Netflix and after hours earnings really helping the Dow. And then we had inauguration day. The stock market was closed, but President Trump is delaying the tariffs again till February 1st, apparently giving Canada and Mexico time to resolve issues before the tariffs are implemented. So again, 25% tariffs. So again, the market liking that, the market liking some earnings, and again, we're going to get a pullback at some point. I told you on January 9th and 10th that the following week we were going to bottom. Surrounding into Inauguration Day, the inflation data and kicking off earnings. And we have those bank earnings. And again, happened on the 13th, that Monday, 13th. So again, you laid out the case why I thought a bottom would take place. It did. Probably get a pullback before going to new all-time highs, but we are going to likely go to new all-time highs very soon. Complete the blow off top for the S&P 500. Again, we had the market closed for Martin Luther King Day, but now we have the earnings. That's helping the Dow, and now we have Netflix and after hours. We'll briefly look at that. Netflix there, and starting to see earnings now begin to pick up. We're going to start getting some Wall Street darlings next week, some real important stocks. We're going to get Microsoft the 29th, as well as Tesla. That's the Fed day as well. And then there's 1 week from tomorrow, and then we're going to get Apple on the 30th. We're going to get the GDP for the fourth quarter, the first estimate on the 30th. So next week's going to be really an important week. But we're revving up earnings season here, and we're getting a lot more earnings this week and a whole lot more over the following 2 weeks after that. One other thing about those tariffs, if they are implemented on February 1st, interesting to see Wall Street's reaction. And we're going to get the inflation data on February 12th with the CPI data there. So it'll be interesting. Eventually, I do think we're going to see it start aggressively turning higher. It is moving off of the bottom. I think eventually we're going to see some hot reports. I do think inflation will turn higher, but the Fed will still end up cutting. Let's take a look at how the market did today. Fast before I look at the market, we got the Netflix earnings and after hours. Stocks are really doing it well in after hours. They top 300 million subscribers, adding a record 19 million new subscribers. They beat on earnings per share and they beat on revenue. Paid memberships increased over 300 million, 301.5 million. And that's taken the stock up about 14.25% in after hours. That's helping futures in after hours as well. Stock was up 1.35% before the market had closed, and again, now adding about 4.25% or so. Thing is, again, we had the inauguration day take place, the ceremony, and President Trump was sworn in. Wall Street likes President Trump's economic policies, but they don't like his tariffs. And again, when we had futures trading Monday, there was some volatility with that, and also with Bitcoin. Bitcoin had a rally of 8%, and it gave it all back except for about 0.89%. We had some volatility surrounding concerns about the tariffs. And then later, it was announced that President Trump was going to delay the tariffs until February 1st. Again, part of the rally today, Wall Street, this is correct, Wall Street is betting that the tariffs won't be harsh, the 25% Canada and for Mexico, tariffs for China and so forth. This is something to be watching because, again, in February, there isn't any more delays. It'll be something to be watching with the inflation data. And eventually we could see, which we've already seen some volatility, on an inflation freak out with the 10-year yield, and the Fed is freaking out. The yields have been surging, but they turned off the trend line. I talked about that over the weekend. That can fuel the next rally, but we could this be an issue later on. It's something worth paying attention to going forward, and Wall Street's reaction to it. Now, this has been pushed forward to February 1st, so after the Fed meeting, some important earnings, and after the GDP and so forth, some economic data. We had the Dow up, again, over 500 points, 538 points, up 1.25%, above 44,000 now. The Dow, remember, was one of the reasons why I told you the market was going to bottom last week. Back that back on January 9th and 10th. I told you why I thought a bottom would happen last week, and it did. The S&P rose by 0.88%, up 50, almost 53 points, up here back above the 6,000 area, 6,049, filling that gap just below 6,000 area. I think it's 6,037 or so, something like that. NASDAQ up 0.64%. The Russell was up 1.85%. VIX was down 4.74%. I told you we were reaching this trend line and the resistance zones for the 10-year Treasury yield. They overthrew the trend line here early 2024, and I told you again, a good chance we're going to turn off of that trend line. Still may go form a double top later, but I told you again, that could create the bottom I was looking for. That happened, as I warned. It ends up popping back up at some point. Again, we can get a pullback. I think there's possible we get a pullback before a breakout to a new all-time high. If diversions to suggest that for the S&P. But again, this helped us get that bottom last week and turned off at this level. I talked about this as we were about to get that inflation data, and I told you to be watching, because if we did see surrounding inflation and the banking earnings last week, we could see a turn off of this trend line right here. Exactly what happened. So a 10-year yield did a good job of helping mark that bottom, the S&P 500. And they helped me call that bottom was the Dow and the Russell, and I told you that the Dow and the Russell were very oversold. They're going to get a rally back. The Russell really, its lower boundary trend line, I told you on the 9th and 10th that again, Russell could very well hit that trend line in the 200 period and bottom out surrounding that area, the lower boundary of the channel. And again, weekly chart as well. The Russell had dropped almost 12.5%. I was down about 7.25%. Became very oversold, and I told you again, they were leading the charge lower. That's why I told you I thought we would bottom, and these bullish divergences also tipped us off to the bottom here for the Russell surrounding the 200. I told you if the Russell breaks the 200 and stays below it, can't get back above it, that's going to be very bearish for the Russell. But if we bounce surrounding this area or dip slightly below it and bounce, that would be positive, and we did that. We did bounce off that 200 and the trend line. Russell also helped me call that bottom last week. Bouncing off this channel line, getting back here above the 20-week last week and getting that reversal. The Russell was up 4% after I called that bottom at the trend line in the 200 for the Russell, and then we saw the RSI firm up. So again, I think the Russell is going to end up getting a lower high and diverging with the S&P 500. That is what happened over here, and that often happens at major tops. Now over here, it was a more feeble rebound. Held at the 20-week. Here, we're getting back above the 20-week. So again, over here, the 20-week was flattening out and starting to decline a little bit. We rallied back up towards it here. It's still pointing higher, and we're getting back above it. The RSI firming up here at the 50. Here, the RSI was dropping below 50 and remained there, moved up to the 50 level on that counter trend. So some similarities, but different. Russell did a good job of tipping us off to that bottom last week, and that's why I laid out that case before we bottomed on the 13th, that week before we bottomed there with the weekend videos, and then also when we bottomed Monday and Tuesday, I was showing you, continued to point out why I thought we would bottom last week, and we did. The divergences on the Dow also tipped us off to a bottom, and I told you again, the Dow had formed bullish, triple bullish diversions. If I was wrong and we go lower, I'd be watching the 200 period, but I told you I thought that the Dow and the Russell were going to rebound back up with these divergences. I told you it would be that the S&P goes down and fills the gap from the presidential election. The Dow had already done it here and hovered and consolidated in this area. And again, bullish divergences, we went a little bit lower because I told you again, S&P was likely going to test that trend line on the weekly chart and the daily chart, 2023 low, and fill the gap, and we're probably going to bottom out. That's exactly what happened. So these signals did a really good job in warning me that we are going to get a bottom last week before it happened. Just like the Dow negative diversions here and the negative diversions, as we saw a moment ago on the Russell, tipped us off to the top here, and we were going to get a December corrective move. If the S&P's triangle ended up breaking down, we'd get a bigger move. If it broke up, then we would get a more shallow sell-off. The triangle broke down on the S&P with the Fed, and we got a bigger sell-off with the Dow and the Russell. But again, Divergences have just done, along with the 60-minute charts, done a wonderful job of tipping us off to the December high and the January bottom. Now the Russell, the S&P, really good signals. The Dow was likely going to firm up here with the 50 level on the RSI and here in the weekly time frame. Again, I'm watching to see, are we just going to go up and get a lower high and a Fibonacci retracement? Are we going to go up and hit this trend line and get a higher high and maybe get that divergence with the transports? So often do. We have a larger one, but do they get a divergence here in the more recent price action? We'll be watching, but again, going to be watching. Do we get a lower high or a higher high? And I think the jury is still out on that, as I've said, with the Dow and the NASDAQ. I do think the Russell's peaked. I think the S&P is going higher, but the Dow could still go to new highs. And again, powerful move. The Dow was up nearly 4% last week. The Russell was up 4%. And this week we start off with the big rally, continuing a big rally. The Dow starting the week off with being up 1.25%. So everything playing out as expected, as planned, and then we'll be watching to see what the performance is. Do the Dow and NASDAQ go make new highs along with the S&P 500? And we'll see what happens. The Dow trend line here, which the S&P never did reach its trend line, the Dow did, also tipped us off to that December top and these negative divergences, which we talked about at the time. And is to watch the Dow and the Russell closely because, again, they really gave us good information. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts, you like the indicators, please take a moment to do that. I don't have any sponsors, just a direct relationship with you. So I just ask that you do what you can to help out. I don't have to get sponsors and end up selling you a bunch of junk and wasting time on all that. That's how most of the money is made on YouTube channels. I don't choose to do that. A lot of shady deals on the internet. I don't want any part of it. I just want to show you my charts. Hopefully the charts help you gain information. I find them very helpful to me. So if you could take a moment to help out, I would really appreciate it. I thank you for your consideration for that. Just quickly, we got the bullish reversal of conditions with the CPI rally last week. We bottomed out, filling the gap. I talked about all this. I predicted that we would bounce off that 2023 trend line we have. We'll be watching to see if we get a pullback or not. We still have the 10 and 20 below the 50. The 10 is still below the 20, so there might be more work to be done. We'll be watching. But the MACD is coming right up to the center line. It's still slightly negative. We'll see if it can go positive with the awesome oscillator, or do we go back into negative territory? We'll be watching. Do we get a pullback right here and now, or do we go higher first? Do have some rising wedges on the 60-minute charts. Watch the video all the way through, and you'll see that. Starting the week off, trying to get a bullish reversal of conditions in the weekly time frame. We'll see how the week ends. May not happen this week, but it could happen forward. And if we close strong, maybe it does happen this week. Again, I think we'll see some green bars eventually show up here on the weekly chart and get another reference point of a divergence. We're bouncing 2023 trend line as I predicted would happen. And I've been watching for green here. I don't know if NASDAQ's going to diverge with S&P or not. Sometimes it does, sometimes it doesn't. You just never know. But at turning points, it can. If I zoom out, what we had happen back over here, NASDAQ just went sideways and it diverged. It made a lower high, went back up and tested the highs, but just below them, came up just below them. Well, S&P moved higher. We'll be watching to see if we get something like that or if it does move to new highs. But again, never did get the bearish reversal of conditions. And again, do we get a lower high or do we get a higher high? We'll be watching to see how it unfolds. We're getting that bullish MACD cross. Again, we're trying to firm up, and we're getting back, moving slightly back in a positive territory there on the MACD. Bullish reversal of conditions after the S&P 500, and we got that on Friday. And again, back-to-back dojis here. We'll be watching to see if we pull back. We end up getting a bigger sell-off and going back and trying to fill the gap at 20,227, I believe it is at potential election gap. If we see tech selling up, but yet we see the S&P and the Dow still trying to climb. If we go back and fill that gap or move towards the 200 on NASDAQ again and just pull back and drift sideways, it still may be we might get that divergence. So if we move to new lows or if we just drift sideways. But again, I told you I thought we'd have a bottom last week with the market. Clearly have that. But remember one thing. While the Dow and the Russell and the S&P were selling off, NASDAQ kept going higher up to mid-December. He peaked December 6th. The Dow peaked December 4th. The Russell peaked November 25th. So possible we see rotation Watching it, we could still move to new highs on NASDAQ, but it's just something we're paying attention to. If the NASDAQ has stopped making new highs, that's something we're watching closely. A bullish reversal of conditions, does it stay that way? The bottom I was looking for last week did occur. Does it now hold here on the NASDAQ? Looking for clues. And why I'm saying that is because, again, oftentimes the NASDAQ will top before the S&P. Same thing with the Russell. Both of them diverge from the S&P at the S&P's 2022 top. Any other tops in history. It always play that way with NASDAQ, but it often plays out that way with the Russell and sometimes with the NASDAQ 100. Now, I'm continuing to monitor NASDAQ. Again, does it go kind of sideways here in the monthly time frame? Does this high hold with our topping tail from December? And again, will it end up diverging with the S&P? It might. That's what happened at the 2022 top for the S&P 500. NASDAQ didn't make a new high, and it just kind of consolidated. We'll see what happens. This is a monthly topping tail. It means nothing, though, unless it gets confirmed and you get a follow-through. So we're watching this closely. Again, the month is still not over yet, and then we'll be watching what happens if we don't confirm it, what happens going on into February. So just some things to be paying attention to. We've got the Fed, we've got earnings, so we'll be watching all of that. I'll be talking about the S&P 500, and again, as I've said, I think that we've come back to fill the election gap right here, 57.83, filling this gap. I think the election rally is continuing, and I told you I thought it would happen last week ahead of the inauguration day, and I think the election rally will continue, take us to new all-time highs, but then I think we'll finish the blow-off top to complete minor wave 5, and I talked about that, and I'll talk more about the S&P in just a moment. But with the NASDAQ, we're trying to break out of the bull flag. The S&P already did it last week. Bitcoin already did it and back tested, so we'll be watching that. But we'll be watching. We got the earnings, and we'll be watching to see what happens. Do we go higher? We got another candle of indecision here with the NASDAQ. So again, if we do pull back, we'll be watching. Do we pull back into the trading range of the bull flag, or do we go higher and then back test it? We'll be watching to see how all of this unfolds. Bottom I was looking for did happen also surrounding that 100 period moving average here with the NASDAQ. We've got a possible channel with the blue trend lines right here. So again, I'll be watching that. Does it go make a new high or not above that topping tail we got on the monthly chart? And if I said weekly chart earlier, it was a monthly chart. We got that topping tail there that I've been talking about every single week. Right here, this is the monthly chart. At the MACD getting a bullish cross now, firming up, and again, could be we confirm a lower high if we can't make new highs, but it also could be we get a larger divergence if we do, if that candle is voided out in the monthly time frame. So we'll be watching closely what happens here with this bullish divergence here on the NASDAQ daily chart with our MACD, and RSI is moving back above 50. So we'll be watching to see we go higher before any kind of pullback, or do we start pulling back and move back into the trading range? We'll be watching closely. I think NASDAQ has bottomed for now, and S&P, again, as I said, I was looking for that bottom last week, which did happen. And it was a bullish divergences on the 60-minute charts that tipped us off to the bottom, along with the Dow and the Russell and the 10-year Treasury note yield and the trend line on the S&P 500, going back to the 2023 low, gap fill from the presidential election. Find all these things, and that's why I thought we'd get a bottom here. We've gapped higher, had some gaps higher on the NASDAQ, and moving above this upper boundary. We'll be watching to see how that plays out. We are also forming a rising wedge on the NASDAQ. NASDAQ never did fill the election gap rally. The Dow did, the S&P did. NASDAQ didn't do it, so it might do it at a later date. But again, we had the bull flag pattern here. Now breaking out of it, we're forming possibly a rising wedge. We'll see what happens. If you get those overthrows to the rising wedge, we have a gap fill up here, gap fill way up here, and we'll be watching to see if we attempt to fill those gaps. And if we fill this upper one here, see new highs on NASDAQ at some point. We moved up to the 200, the black line. The 50 is still below the 200 period here. So again, we'll be watching to see if there's more work to be done. And if we do sell off, again, do we drop back into the trading range of the bull flag pattern? We are forming a divergence on these histograms in the 60-minute time frame. Could that allow the MACD to roll over? And if we do, how big of a pullback do we get? But I do expect that we're likely going to get one on the S&P before we move to new highs. Our NASDAQ has a series of lower highs, so So again, we'll be watching to see what happens here. Does it end up not being able to make new highs after all is said and done? It's just getting a lot of chop for several weeks in 2021 and early 2022, merging with the S&P 500. Also, I warned you before we got the rally that we were likely going to drop lower into this trend line from the 2023 low right here. And that's exactly what happened. I told you we were likely going to bounce at that trend line and fill the gap from the presidential election rally. That's why I told you I thought we'd have a bottom with what I was seeing with the Russell, with the Dow, 10-year yield. And I told you we'd likely bottom last week, and that's exactly what happened. Again, I think that we are now done with minor wave 4. And again, the head and shoulders set up, and the people that told us the December sell-off was never going to happen got all bearish down at the lows right around the 9th and 10th. And then as we were bottoming out there on the 13th, 14th with the PPI data forming that bottom, again, they got extremely bearish. I told you that was likely confirming we were going to have a bottom because the herd was starting to turn bearish. As we go make new highs, again, the herd is going to get extremely bullish when we come up here to the highs. It's going to be at this upper trend line right here of the rising wedge and intersecting with this upper channel line. And again, this could be a couple of weeks. It could be several weeks when we get there. But again, I do believe that we will reach these trend lines. Might be at the time when they intersect. So again, we might go here on into late January, on into February somewhere, drags out into later in the first quarter. The trend line will go higher. So we'll be watching that. Trend line's my target, not a number. We didn't reach it in the previous 11 weeks. For 11 weeks, we didn't reach it. We came close to it. We rallied up towards it in November, and then on into the December high, but we failed to reach it. I think we still will, and I think that will be our final fifth wave higher. And then I think we're going to come back and break this 2023 trend line, and I think that will confirm the reversal, and I think we'll get a quick 20% drop over about 2 or 3 months. I talked about this in great length and detail, these charts weekend. Last video was 11 minutes, and I told you in my last video why I still believe, and I've been laying out my case for the bottom in my videos previous week and before the bottom happened, and then I've been laying out my case for the rally to new all-time highs to complete the blow-off top. Why I don't believe it's done yet. Did that and laid out the case, and didn't watch my weekend videos, go watch them. One is 11 minutes and one's just over 30 minutes. Laying out the case for the blow-off top. Really some good information there. I hope it helps you. It helps me. Love this information really me, so I'd like to share that information with you. And I think we're forming this multiple diversions. I don't think it's done yet. I think that the sell-off here just took us back to the 50 level on the RSI, and I think we're going to push up here. We'll probably get a pullback before we make new all-time highs. Got a rising wedge on the 60-minute chart. We got negative divergences forming there on the 15-minute chart, so we'll see what happens. Get a pullback at some point this week, but I don't know if it'll be a big pullback or a small pullback. Whichever way it plays out, I think that we will end up moving to new all-time highs eventually, but I do think that we'll see a top when we come up into this area. Whether that's a couple of weeks, whether it's several weeks, I have no idea. You can get stuff like this where you move up close to it, but then you get this sell-off, and we sold off on the S&P. Back to the 2023 trend line. But we did bounce where I thought we would bounce. We did bottom where I thought we would bottom. Everything's playing out as expected. I remain bullish on the S&P 500, believing we're going to go to new all-time highs, believing we're going to go up to this trend line as I've talked about. I did a video on you several resistance levels up at this area here. Reach that sooner rather than later. That'd be the high 6,200 area. If we do it January on into February somewhere, you're looking at the 6,300, around 6,340 or so, up to as high as the 6,400 area, depending on when we come into contact with it. But I remain bullish here for the weekly time frame. I do think a major top is developing, and when it does, it's going to be scary. When the sell-off happens, they're going to be so complacent, they're going to go into shock. Over here, when we peaked in 2022, we saw a very quick drop of 15%, very, very quick over a couple of weeks here, several weeks, but we saw a quick 15% drop by the February low after peaking that first week of January. We'll do what we did in 2007 When we peaked out, we had an immediate drop of 20%, and we did the same. Market topped in 2000. We had dropped by 20%, nearly 20%, and then we got a rebound back up. I believe that will be when we get an emergency cut, in all likelihood, out of the Fed. I think it'll be the Fed panicking. We're going to get that GDP at the end of the month. We're going to get more economic data, and we do have signs of a slowing economy. Right now, we have a lot of indicators that are pointing to a coming recession. But again, the Fed dismisses the stuff and ignores it, what they always do. So why should we be shocked now that they're doing it again? They told us inflation was transitory until it reached 9%. This is the bounce of the trend line that I talked about, where I thought we were going. And why I told you I thought we would bottom. This past week we did. So here you have it. S&P is forming a rising wedge. We had the rally today. We gapped higher. We pulled back. And then we continued onward and upward. We got this rising wedge going on. We got the multiple divergences going on. So eventually, I think the rising wedge will play out. And then we'll see, do we just get a mild pullback, or is it something bigger? I'm watching these gaps. Here's the gap that we had with today's gap higher, 59.97. Here's the gap previously from last week at 59.38. With our gap higher there on Friday. And again, way down here with the CPI gap right here at 58.40, 42, 43 rounding up. So we got some gaps to be watching. We do in fact pull back, whether a big pullback or a shallow pullback, who knows? I told you I thought we had a bottom over here with these bullish divergences that were forming. 5-minute chart and on the 15-minute chart forming some negative divergences, and here probably on the MACD we'll probably see again another reference point if we go a little higher but then turn down. We'll be watching to see if we turn down some point this week, and that could come as soon as tomorrow with the bearish rising wedge here. We'll see what happens. You got the 15-minute chart doing the same thing here. Again, the bullish diversions. We talked about the bullish divergences, and I told you we gapped lower January 13th at Monday, and we hit the trend line of the 2023 trend line, and we filled the gap right here at 57.83 from the election rally there, and then we had this rally back up. Now you have this rising wedge pattern here, and again, multiple point divergences. So again, I'll be watching these gap fill areas. I'll be watching gap support. You know, do we just pull back? Do we just get a mild pullback and just back test the trend line, and that's it? You know, back test the bull flag. We had a head and shoulders that evolved into a bull flag, formed the right shoulder after we sold off, you know, late after the sell-off on, you know, the 9th, 10th, and 13th, and 14th. And again, when we were down here, forming what I talked about on that 5-minute chart as possibly an inverse head and shoulders pattern setting up. The herd started telling us how we were going to go a whole lot lower. And then we bottomed out. Just like over here, they told us we were going to go a whole lot higher. Well, we pull back, but we're going to make new all-time highs. We're coming up here to the gap fill at 6,037. We filled that gap. We have another gap up here at 6,074. We haven't reached that. And then the high up here at 6,099, just under 6,100. We'll probably pull back before we do move to a new high. It doesn't have to play out that way, but it could. Be watching. Do we get a mild pullback or go higher, even bust up through? Sometimes you overthrow these rising wedge patterns. You get an overthrow move. Do we go a little higher and turn back down, or do we turn back down and again just get a mild pullback, or do we get something bigger? Again, our 50 is now above the 200 period moving average. So it could be the 200 axis support or near the 200 if we do get some kind of pullback. It could go higher though. So again, do we get a mild pullback or a bigger pullback? I don't have the answer to that. My signals did tip me off to a bottom. They did tip me off to the top over here, the negative diversions. But I told you, well, the Dow and the Russell were selling off. We were going sideways on the S&P. And I told you if we break down, we'll get a bigger sell-off with the market, Dow and the Russell. If we got an upward resolution of the triangle, that it would be coming to a conclusion with the Dow and the Russell and get a more mild pullback. We got that bigger one with the Fed right there, and that formed this bull flag. But he was saying, oh, we got the head and shoulders now. And again, I told you it evolved into a bull flag pattern, which is now broken out. I don't know if we trade back into this range or not. Again, we'll see. Remain bullish on the S&P 500. And I think the bottom that I called here was correct, predicted it would happen, and then all that inverse head and shoulders pattern set up. So that's what's happening here, this rising wedge, something worth watching with our negative diversions here on the RSI. And if you look down here on the MACD as well here on this 15-minute chart. And the 15-minute gives us the shorter term price fluctuations. So again, this could be warning us that we're going to get some kind of pullback here as we're going to be looking for a higher low to set up. This is probably a wave one of that minor wave, and the first subwave here, and we'll probably see a wave two set up. I don't know if it'll be big or small, have no idea. And the 60-minute charts. The 60-minute charts tipped us off to the bottom as well. I talked about the bullish divergences here, and I told you before we gapped lower, I told you this gap is likely going to fill. We're going to hit that 2023 trend line, and we're going to form a bottom. And I told you the RSI here was probably going to turn back down and form a bullish divergence, completing this larger multiple point divergence with the divergence in this most recent price action. That's what happened over here. That's what happened over here. These bottoms, we had these bullish divergences develop. So I told you again, we'd likely fill that gap and hit that 2023 trend line. That's exactly what happened. So again, we'll be watching. Again, I don't know if we move back into filling these gaps and into the trading range. It happens, but again, I do think some kind of pullback at some point, and maybe that comes before we break to a new all-time high. But like I said, I do believe we're going to break to a new all-time high. You have the head and shoulders pattern here, and again, told you I didn't think it was going to play out. I thought it was a fake out pattern, and again, we bounced off that 2023 trend line. We've moved up here. Bitcoin formed the same pattern. It moved to a new high, but then it got that topping tail. Inauguration day, Bitcoin has back tested the bull flag. It had a head and shoulders, it evolved into a bull flag. So we'll be watching. Do we just get a more mild pullback and just back test, or do we end up seeing something bigger with both of them? We'll be watching closely. Becoming overbought doesn't mean we can't go become more overbought, but you do have a rising wedge here trying to form. See if that pattern plays out or not. We go higher on the histogram for the MACD. We are getting a divergence right here, so MACD could roll over. And then again, we'll be watching, do we now confirm a higher low? We had the multiple point divergences here with the MACD and the RSI. Do we now confirm a higher low? And whether that higher low is going to be a shallow retracement or a deeper retracement, we'll be watching. And if we start to turn, I'll be marking the Fibonacci retracement levels on there to be looking at those levels closely. And eventually, I think we move up towards one of these trend lines. Again, I marked this trend line right here, that low on the Monday, 1 week ago, as it was forming, again, a parallel boundary with this boundary here. And then here's our July peak right here in that rising wedge with the red trend line. I think we end up moving up to one of these trend lines, depending on how long it takes to get there, also depending on how high we go. But I do think, again, which are very close, the red trend line is the upper boundary of the rising wedge, very, very close to that blue trend line of the channel line in our weekly time frame. We have the bull flag here. Here's that head and shoulders. You can see it outlined in red there. I told you I didn't think that was going to play out, and that would have taken us back towards the 200, back towards 55, 60. Actually, that would have been below the 200 at that time, and 200 is constantly rising here at this moment. I thought it was going to be an ABC move, and again, the bull flag formed with that dip to fill the gap there, and again, we've now broken out. So again, we'll see. Do we throw back into the pattern, or do we just back test? We'll see what happens at some point, or do we just keep going parabolic? Do we push to new highs first? Again, the signals are back to bullish daily and the weekly time frame. So again, I remain bullish. We're going higher, but at some point, I think we're going to get a pullback. My guess, and that's all it is just a guess. I tell you exactly what I think, like what I told you here at the bottom, over here with the top in July. And again, the signals have done a really nice job in calling a lot of these turns. I'm telling you where I think we're going, and I think that it's going to be at one of these trend lines. And again, the rising wedge or the channel here on the S&P 500 will probably get a pullback, but I think we're going new all-time highs over the next few weeks or several weeks. And I think we're going to top. Again, it might be where these trend lines intersect, as I've said. Here it is on the daily chart. Here's that rising wedge in the trend line from the July peak, and I'm becoming more and more convinced that this is where we're likely headed on the S&P 500, this large rising wedge. And again, I talked about predicting a bounce here, going a little bit lower and bouncing off of this trend line. We've slightly breached it, but that is where I was expecting the bounce, and it happened. Well, this is where I think we're going, but then I think we're going to top. Now, when we reach that level, we'll be intersecting with that upper channel line there on the weekly chart. And again, I want to continue to point out the MACD here. I think that with the bullish cross of the MACD, we're now coming right up here to the center line. It looks like we're just still under it slightly if I'm just eyeballing it there. I think the MACD is eventually going to come up here like this. We'll probably see some kind of pullback and then resume the advance and get a wave 2 and a 3 and go on our way to make 5 waves in the larger minor wave, but get those smaller subwaves and probably get another reference point. Over here we had the July peak with the MACD and we're diverging. Do you see this? Very similar to what we had with the peak over here. Now this was only a mild pullback. This will likely lead to a reversal. We're forming those major negative divergences on the weekly and the monthly charts.